Welcome to today's Explainer. We're taking a really comprehensive look at a company you probably know, but honestly might not even fully recognize anymore, Generac Holdings. Today we're diving into this fascinating kind of split personality they've got going on. On one hand, you've got the absolute explosive demand from the AI boom, and on the other, well, some pretty grounded, frustrating challenges with their legacy consumer hardware. It is, quite literally, a tale of two entirely different markets.
So let's kick things off with just a staggering number, $700 million. That is Generac's massive current backlog for their commercial and industrial products. And look, this isn't just a little bump in sales, this is a fundamental shift that is completely changing their company profile. This one single metric gives us visibility way into the future, and it tells us that the demand for their enterprise solutions is just surging at a totally unprecedented rate.
Section 1. The Data Center Boom.
To really understand that massive backlog, we have to look at how a company that's famous for neighborhood home backup generators, the kind you run out and buy when a nasty storm knocks out your power, is stepping up to a completely different scale. McKinsey is actually projecting that global demand for data center capacity will more than triple by 2030. Think about it. AI requires this enormous, uninterrupted supply of electricity just to think. And Generac? They are aggressively pivoting to make sure these massive digital brains never go dark.
And this huge pivot? It's backed by some really serious capital and major commitments. Beyond that $700 million backlog we just talked about, Generac has also scored a massive $600 million non-binding notice to proceed for 2027 deliveries, and that's from just a single hyperscale data center customer. On top of that, they're in the final approval stages with two other major hyperscale clients. The CEO actually described it as being in the final yard of a 100-yard dash. They are successfully navigating all those rigorous audits, supply chain checks, and factory visits you have to clear to play in this top-tier space.
Moving right along to part 2, expanding the footprint.
Now, to meet this truly unprecedented generational enterprise demand, Generac physically has to grow. They just can't rely on their existing infrastructure anymore. So they're opening this state-of-the-art facility in Sussex, Wisconsin, slated for the fourth quarter of 2026. This brings in over 100 new manufacturing jobs, and it significantly scales up their capacity, specifically for these massive commercial and industrial generators.
This expansion in Sussex, along with their other new and expanded facilities in Wisconsin, is a huge strategic move to capture market share. By the fourth quarter, this new footprint is going to push Generac's domestic manufacturing capacity for these massive units to over $1 billion. Think of it like they are essentially coiling the spring, getting fully ready for the massive rollout of AI infrastructure in 2027 and beyond.
But hey, it's not just about building bigger factories, right? It's about controlling the entire supply chain. By acquiring key suppliers like Allmand back in January for mobile products and Enercon in April of 2026 for enclosures and switchgear, Generac is solving major industry bottlenecks totally in-house. Take Enercon, for example. By bringing that packaging capability in-house, Generac gets to control their lead times and actually expand their profit margins. And that is absolutely crucial when you're dealing with these bespoke, highly customized genset packages for big data centers.
Which brings us to part 3, Q1 earnings surge.
All of this commercial expansion and strategic maneuvering, it isn't just theoretical. It is heavily reflected in their Q1 financials. Generac completely smashed expectations. They posted an actual earnings per share of $1.80 compared to the projected $1.33. Just a huge beat. Alongside this, they pulled in a massive $1.06 billion in total revenue for the quarter. This strong operating leverage and really favorable sales mix actually allowed them to go ahead and raise their full-year guidance.
And this slide right here brilliantly illustrates that tale of two markets we're talking about today. Look at that commercial and industrial segment, a massive, undeniable 28% year-over-year growth, driven straight by this AI and data center boom. But then, look at their legacy residential segment. The home backup generators they're traditionally known for, it essentially flatlined, eking out just roughly 1% growth.
All right, let's look at part 4, recalls and lawsuits. Because, well, we have to look at the other side of the coin. While the enterprise side is surging and absolutely smashing earnings expectations, Generac is facing some really severe headwinds on the ground with everyday homeowners. According to a report by ClassAction.org, a recent class action lawsuit was filed alleging a dangerous design defect in their portable consumer generators. Consumers are arguing that Generac misrepresented these units as durable and efficient, when in reality, they contained a defect that posed a substantial risk to user safety.
The irony here is just stark. You have a company powering the incredibly advanced future of artificial intelligence, but they're struggling to keep their basic consumer products safe. The U.S. Consumer Product Safety Commission actually recalled 149,000 of these units after 114 reports of fuel leaking right from the carburetors. Obviously, that creates a massive fire and burn hazard. And adding insult to injury, the company refused refunds. They left everyday buyers with the super frustrating and frankly dangerous burden of hauling these fire-prone units to dealers just to get a free repair.
And we're not talking about a small, isolated batch here either. These recalled units, which span multiple model types, were sold for hundreds of dollars, anywhere from $600 to $1,300 a pop, and they were sold at major retailers like Home Depot and Lowe's over a pretty extended period, from May 2025 all the way through February 2026. So you can easily see why this reality on the ground is creating a ton of friction in their legacy consumer hardware market. So how are they handling this? Well, to combat these consumer challenges, streamline their operations, and cut operating expenses, the company is undertaking a major internal shift. They're actually consolidating their residential, portable, and energy tech teams into one single unified group, which they're calling Generac Home. This reorganization is designed to better leverage synergies across product development, supply chains, and customer service. And, at the same time, it's meant to realize some much-needed cost savings to support their future profit margins.
Finally, Part 5. The future of power.
So where exactly does all of this leave the energy technology giant moving forward? Look, we are witnessing a truly historic corporate pivot right now. Generac is actively trying to balance the friction and this necessary reorganization of its legacy consumer hardware against the explosive, highly profitable demands of AI infrastructure. Their massive enterprise success is pulling the company's financials upward in a really profound way, even while they're stuck managing these consumer recalls and a relatively flat residential growth curve. Which leaves us with a really fascinating question to ponder as we wrap up today. Will the totally unstoppable rise of AI data centers and these massive hyperscale enterprise contracts make us completely forget Generac's roots as the neighborhood home backup company? Or is the residential market going to remain a core, even if it's slower growing, pillar of their identity? It's a high-stakes balancing act for sure, and it's one we are going to be watching very, very closely. Thanks so much for joining me for this explainer.